Every property owner is well advised to take special care when hiring contractors. This apparently commonplace advice is true for homeowners as well as real estate investors, but is not as simple as it may sound. Hello, I'm Philip Elms. I've been a Chicago-based real estate developer and investor for a number of decades. Along the way, I've learned to avoid a number of traps out there which, handled badly, have the potential to ruin financially the unwary. Here we will discuss one of the more dangerous hazards we encounter and how you can easily avoid falling victim to this common, sometimes fatal error. The reason we need to take particular care with this potential problem is simple. Whether we know it or not, we take on significant legal liability when we hire anyone to perform construction-related work on property we own. Not handled properly, your liability can run into the hundreds of thousands of dollars. To be complacent may amount to betting the ranch unnecessarily when protections are readily available. As you might guess, this extraordinary risk can generally be insured over. The problem is your contractor's insurance may not provide the protection you think it does. More should be said about contractors carrying the proper insurance. More often than not, a contractor will assert that they are fully insured. Well, this is verifiable. Industry standard practice calls for the contractor to provide you, upon your request, a certificate of insurance. Such certificates are prepared by the insurance agent representing the insurer. It will name both the contractor and, importantly, the employer, in this case, the property owner, yourself, as co-insured. The insurance is effectively insuring both parties in the event of loss. Upon inspection, you may well find the $1 million or more of insurance the contractor probably boasted of. But take another look. More often than not, I've found that the $1 million is liability coverage. That is, for example, if the contractor's guys drop a hammer on the head of a passerby, the contractor's covered. But that's about it. Look more closely and you will find an important coverage missing. Workers' compensation insurance is insurance that covers medical expenses and a portion of lost wages for employees who become injured or ill on the job. Coverage also includes employees' rehabilitation and death benefits. Here we have a sample certificate of insurance, with the points we need to attend to numbered. Here we have a sample certificate of insurance with the points we should attend to numbered. First, number 1 is the name of the insured, your contractor. Second, number 2 is the name of the insurance company insuring the contractor. Point 3 is the liability portion of the form, and across from 3 is number 4, the dollar amount of coverage afforded by the policy. In this illustration, $1 million. And next, number 5, is the part we care about just now, the section denoting the workers' comp coverage. To the right is the amount of coverage, our number 6. In this illustration, the limits are $1 million for each occurrence. Point 7, other provisions, typically expands those included as co-insured, including owners, officers, and other employees of the insured, and is likely where one might ask to be included as co-insured as well. One should request this when contracting with the insured contractor. This should be confirmed before final acceptance of the certificate. And finally, point 8 identifies the certificate holder. In this case, once again, the named insured, the contractor. It is well to note the date the certificate is issued, upper right on this form. Contractors have been known to submit out-of-date certificates, which are without value for our purposes. There is language, lower right, number 9, that indicates the insured shall be notified in the event of cancellation or termination of insurance. But note that this may not include the customer, presumably you, unless that customer, you, is named as co-insured. Now back to our discussion. Well, how does workers' comp insurance work? Each state has its own unique set of workers' compensation laws that employers must follow. These regulations help ensure that employers, in our case the contractors we hire, provide coverage for the cost of work-related injuries or occupational diseases, regardless of employee negligence. The employee taking unnecessary risks or being simply careless does not invalidate their access to coverage. An employee can only receive benefits if their injury or illness relates to their job duties or employment. Workers' comp insurance could cover injuries caused by lifting building materials, slipping on a wet surface, or sustaining injury falling from a ladder. Workers' compensation insurance is required by law in almost every state. Some worker exemptions exist, so you will want to check with your state to find out if coverage is mandatory for your business. Most likely it is. If you are a contractor, choosing to forego workers' comp coverage puts you and your business at high financial risk. Should one of your employees be injured on the job, not only can you face a lawsuit for workplace injuries, but you'll likely be fined for breaking the law. Keep in mind, workers' comp insurance protects not only your contractor's employees, but their business too. For example, if your contractor's insurance is compliant with state law, an employee who receives benefits can't sue him for their injuries or lost wages. They can, however, sue for things that aren't covered under the workers' comp portion of the contractor's policy. Employer's liability insurance is also included in most policies to pay for court costs and legal fees in the event of such a lawsuit. As you may guess, this insurance is generally costly, more costly than the typical small contractor is willing to spend. They might just figure they aren't judgment-proof. That is, if they don't have any assets to speak of, they have little or nothing to lose. Importantly, the absence of workman's comp insurance may become your problem in the event of a loss or claim. Should the contractor prove unable to sustain or pay the claim, the courts generally are quite willing to look to the property owner, possibly you, to cover the loss. Claims are quite large, running to hundreds of thousands of dollars. Should the court enter a judgment against you as owner of the property, personally, there goes your house and probably your kid's college fund. Better the project property is owned by a corporation or LLC. If that's the case, say goodbye to whatever assets may be in the corporation, but you may still have a house to come home to. This is not to suggest these small contractors are dishonest or plan to cheat you. They're just not very good at the business side of what they do, even to not knowing how to properly figure actual costs in their bid proposals, which explains in part how they get into trouble covering their costs once the work is underway. Left to their own, arguably limited business capabilities, it is this latter group of contractors that create the nightmare scenarios too often associated with the rehab business. It only remains to ask, do you fancy yourself a risk taker? when it comes to having the right insurance, in this case workman's comp, maybe not. To learn more about savvy real estate investing, visit urbanrehabber.com. You may click here if you are on the YouTube version of this video. And if you like this video, please click the like button. Thanks. This is Phil Elms. Hope to talk again soon.